Good day to you there, traders. Welcome back to our forex trading. Now, one of the biggest mistakes traders make is forcing trades in the wrong market structure. If you don't understand trend lines and market structure, you are simply guessing your trades. You don't know exactly what and where or when to place a trade. So today, I'll show you how to use trend lines to identify high probability trade setups and avoid unnecessary losses. So by the end of this video, you know how to identify market trends with trend lines, spot trend reversals, and then you'll be able to combine trend lines with market structure for sniper entries. Okay, so if you like this video, make sure that you don't forget to like, subscribe, and turn on your notifications so you never miss a powerful trading lesson next time. So first, now you need to understand the market structure. How does market structure works? Now, market structure is the basic of price action. Price movement is basically generated from market structure. Understand? So the foundation of trading is market structure. Now we have higher highs and higher lows being created in an uptrend, while in a downtrend we have lower highs and lower lows being created, giving us a wonderful downtrend movement. While in a consolidation we have indecision, which is a situation whereby buyers and sellers are not sure of which price they want to auction for. So that is when we have indecision in the market, and at that time of the market it is most advisable to stay away from the charts, or you simply wait for a breakout to either of the directions. Now a tip for you guys there: the market doesn't move in a straight line. The market never moves in a straight line just continuously, just in that same direction. It doesn't just keep moving vertically or horizontally. Price moves in waves. It goes up and down. If you learn to read these swings, you get to transform your trading journey as a trader. Alright, now trend lines. Trend lines are basically the roadmap to smart trading. A trend line is a diagonal support or resistance that connects price action over time. Please don't forget to like and subscribe and turn on your notifications so you never miss a powerful trading lesson next time. Alright, so we dive on in the class. How do you get to understand trend lines as a roadmap to smart trading? Now, the first thing you do is you find out your support and resistance to get a wonderful trend line spotted out. Then, the more times a trend line is tested and respected, the stronger it is. That is, each time price comes to a particular trend line and respects that trend line is said to be a strong price level. Then, for uptrends, for you to get an upward trend line, you draw your lines from under the lows. That is, from support levels. You draw your lines from under the lows. There's one example of that here. Your lines should be drawn. You can see these two here. When I hover it, it says trend line. So you draw your trend line from the lows. This is a low here. This is another low here. You simply connect the lows together to get your trend line. Now, if we are to expect price to move a very swift movement, we'll be expecting a comeback to this trend line again. But let's go to the lower chart so we can get an even more suitable move on price to the upside like that. Okay, if we take from here, we have to take it from here, still respecting that trend line. I believe price should respect it from down here. You can see. Let's zoom in well. You can see it's still the same price action all the way from down here to that high, to those highs. Price is still respecting that same trend line. The same trend line from all the way down here, even way down here. Okay, we had a break of the trend line from down here, but this trend line is still being respected all the way to these highs here. So you can see how interesting a trend line can be to get your price movement. Now, why for a downtrend, you draw your trend lines above the highs. Now you look for the highs on the charts to draw your trend lines. Let's go to the 1 hour. Gold is more of a bullish, is having more of bullish price actions now. So to get our downtrends, we need to move to a lower time frame. Okay, now you see If you look here well, you see price keeps reacting to the trend line and keeps moving down. Although we had a break of the trend line here, but price came back and continued following that same trend line to the downside. So you draw your downtrend from the highs. Like I said in the short note here. Now, a pro tip for you guys: use trend lines on higher time frames like the 4-hour, the daily, for most reliable signals. If you want to get high probability setups, make sure to find your trend lines align on the higher time frames like the 4-hour chart. You understand? So that's a tip you should try to stick to, because most times the 4-hour upwards are very much reliable time frames to get high probable setups. Alright, now how do you enter and exit trades using trend lines? Break and retest strategy. Firstly, you wait for price to break a trend line and retest it before entering. We've done a class on this, but I'll just give a short explanation again. Now, if you have a trend line drawn on your chart, probably you have drawn that trend line for some time. Once you draw the trend line, you wait for price to come back. Now, price, let's use the path to here. Price went all the way down here, came back, tested this trend line, went down, tested this area again, came back to the trend line, but broke it swiftly, and then tested after the break to the upside, came back, just a little tap, and then we had a final break again. So now, if we hadn't waited to take this trade here, we wouldn't have known that price would break this level. So it is of utmost importance that you wait for a break of the trend line before you can trust that trade to be a profitable one. That is for your break and retest strategy. So now the trend line bounces. Now when you get a trend line, you need to trade off a strong trend line bounce in line with market structure. Now we didn't have a bounce here, we had a break out of that trend line. Let's do something that has a bounce. So now, sorry, that's the wrong tool. Okay, here, see this trend line. Now the path 2, price came all the way from that high, respected, created a new short-term high, came back down, created a low, and then broke to the high again, created a potential low, created a higher high, and came back, retesting the same trend line before a further break to the upside. You see, price keeps reacting to this trend line and giving us higher highs. Okay, now for fake outs and traps, you need to avoid getting tricked by false breakouts. There are times whereby price comes to your trend line, but then that comeback is a false comeback, causing a breakout of the trend line, like what happened in the last example we did here. If you look towards the chart here, you see price came back to the trend line here, but then it just did a little gap, retested the trend line, and gave a swift change of structure to the upside. So this is a false breakout here, this is a false retest of the trend line. So you need to watch out of that, for that on your chart as well. Now, a golden rule for you guys: always use trend lines along support and resistance or price action confirmations. Whenever you get a trade setup, if you are able to combine both the trend lines and the support and resistance together, you're going to get a wonderful price action or a wonderful trade setup. This is something for you all to make sure to stick to here. Now, trend lines and market structure are the key to understanding price movement and making smart trading decisions. If you master this, you'll never trade blindly again. Now, make sure to not forget to like and subscribe and turn on notifications so you never miss a powerful trading lesson in the next video. Okay? So I would love to see you all drop which trend line strategy do you use most often. Drop a comment below. I want to see us go deeper into this topic in the comment section.